Corporate finance practice problem using OneNote. Preferred stock yield or rate of return calculation. Get ready. It's time to take your chance with corporate finance. Here we are in OneNote. If you have access to OneNote, would like to follow along, you're not required to, but if would like to, we're on the icon on the left-hand side. We're in the practice problems section and the 1036 preferred stock yield or rate of return tab. Also note, when using OneNote, take a look at the immersive reader. Many of our presentations up top will be mirrored down below in the text areas. The text areas having the same name and number and are transcripts. Transcripts, they can be translated into multiple different languages and either listened to or read in those languages, thereby being a good complement to the presentations. Closing out the icon, we have our information up top, which we will then populate into the blue area down below. We are concentrating in on the preferred stock, which is typically a little bit more easy to think about something like the calculation of the yield or rate of return than the common stock, remembering that the common stock is basically thought of as the ownership of the company. Therefore, it's not just dividends that we have as with regards to the rate of return we have to consider, but the valuation. Whereas preferred stock, we're typically able to focus in on the return being basically the dividend. So keeping that in mind, we got the dividend, annual dividend here at the 19.6. We're going to say that the price is 205. So the yield or required rate of return then is what we are looking for given this information. Straightforward calculation. We're going to then say the 19.6 then, and the price being the 205, 19.6 divided by the 205 giving us the 9.56. So in other words, if I take the 19.6 divided by the 205, we get the 0.095697 and so on and so forth, converting that, moving the decimal two places to the 9.56%. The 9.56%. So in other words, if you were to think about us putting down the 205 and then having a required rate of return at the times the 0.0956 about, you'd get about the 19.6 with regards to the dividend. We can also compare that to the price type of calculation that we saw in the past, just reworking these numbers in multiple different ways so that we can see basically solving for the unknown. So if we had the price and we know that the dividend is going to be then the 19.6, and we have the yield or required rate of return, what we calculated up here, the 9.56%, then we can take then the 19.6 divided by the 9.56 to once again back to the price of the 205 as we saw in a prior presentation. So if we had the 19.6 divided by the yield of the 0.0956, we then get back to the 205 on the price.